My friends, what is going on? Welcome back to the channel. So I recently got a Peloton and started using that, and I just finished up my class about 20 minutes ago. So if I sound like I'm dying throughout this thing, I am. But a lot of you that know me, have followed me for a long time, know that I'm also a kickboxing and jiu-jitsu instructor, and so it's just like, man, I can train on a bag or roll all day long, but man, I am just not a runner. You runners are just complete psychopaths, man. But while doing that, I was just kind of thinking, I was like, you know what? There's a lot of really good chart setups out there. So I threw it out here on Twitter, hit me with 500 likes. And honestly, right now, we're not even close. But here we are. I'm making the video anyway. Wanted to cover a little bit about the overall market, but specifically, a lot of people have been asking me about my calls recently on like Meta and Palantir, why I thought those tops were in. Also want to take a quick look at GME, Tesla. I'll just kind of browse through some of the other charts that I'm looking at. So who knows? I just sit down, I start making these videos. I appreciate you if you are a liker or a subscriber. The YouTube channel's been growing nicely. I think I just recently crossed 8,000 subscribers, so I greatly appreciate the time, energy, and effort when you post nice comments, things of that nature. I always try to respond to them or like them, but I just want you to know I appreciate you at the end of the day. There's a lot of trash that goes on with social media, but I don't ever want anybody to think that I don't see the nice comments or the good or anything. I mean, honestly, like the nice comments and the kind messages and everything like that, that's the only reason that I even still do any of this stuff. So before we jump in the video, you guys know the deal. Nothing I'm giving you is financial advice. Everything is for informational and educational purposes, so you can make great decisions for yourself, your family, and your portfolio. I always tell my trading team, which I will be opening the Discord tomorrow for probably 15 to 25 spots. I will post that here on my Twitter page. And once those 15, 25 spots are taken, they're taken. That's it. No ifs, ands, or buts about it. Usually fills up within, quickly is like 15, 20 minutes. Sometimes it takes a couple of hours, but we'll see how it goes. If you want to join, just click on the link, and I'll probably do some type of discount I usually do for your first month. Zero pressure to join. I don't care if you join or not, but if you do join, you better be ready to go to work, because that's what we do. Like this video I'm about to do, we do, but between myself and Bronx, we do lots of videos every single week. So that way we can stay on the ball, because if you followed me for any amount of time, you always know I say every second the market is open, you are constantly getting new information, and you have to be able, if you want to be successful, you have to be able to react to that new information. At any point in time as something changes, and like I said, a lot of people have been asking me about Palantir and Meta and how I spotted those signs of weakness and everything like that, and I posted both of them the very next day. Well, I don't even remember. Meta's gone down since I posted the weakness in Meta. Meta's gone down 5%, and Palantir has gone down at its peak 23%, and then right now, but it's down a total right now about 15%. So, like I said, we shall cover that, so that way you can spot them. So having said that, let's jump into the video. First things first, the indexes are looking a little weak to me right now. We've obviously had overall a nice uptrend going down here from the lows at 590 all the way up to, so we've had 20 points up. So I do think it's possible. These candles and the volume are weak. You've got a higher volume. It's still low overall, but the volume is picking up and the candles are getting weaker. So honestly, even if it stays range bound up here, that's not the end of the world. But I do think we could potentially, I like the fact that we based off that 608, so these previous highs back here from the December top. Before we found support up here, but then we gapped down, then we rejected, so on and so forth. Now, as of right now, we're showing support. So we got to treat support as support until it's shown otherwise. QQQ, though, I really don't like these candles here. Definitely a high volume. hanging man candle, which if we bounce over here to the weekly is really starting to look pretty weak. SPY weekly too. Obviously, we have to tomorrow. But if this starts to close below like last week's close into tomorrow, that's going to look pretty weak going forward. And seasonality, we're getting into a little bit of times of weakness before really potential bounce territory. So we'll take it one level, one day at a time. Like I said, I think we can come back to about 515 on Q. That wouldn't surprise me. And SPY, I think we could test 600 or maybe even slightly below. But support is support until proven otherwise. Now, let's talk about Tesla first. So on Tesla, I said this was the seller's climax. I said overall, I still think that we are in a bull trap. I still think that is true. From that seller's climax, our bounce, the volume has constantly been decreasing. We had a higher volume yesterday. Now we are above some key support levels. 350 is going to be important heading into tomorrow. That was going to be the close from over here. Plus, when in doubt, looking left, this whole area right here. It's no surprise that we're catching a rejection in here. And I think we're going to probably come down at least to 340, and I'll make my case for it here in just a second. So originally I called this bounce here that we would head up towards 370. Didn't quite get there. We got as high as like 367 and change. Yeah, 367.34. Then today, this was certainly disappointing where it opened because we had kind of this nice little bull flag going in here like this at the open today. So I was perfectly willing to wait to consolidate in here. But right off the rip, we opened up, came down here, started slicing through it. And so I posted on Twitter, I took a loss on my calls, like a 21 or 22% loss on calls that I was in. I took a ton of profit yesterday. And then I held some 360 calls that I was in. And unfortunately, those didn't work out. Like I said, took the 20% L on that. And then now, Tesla was much weaker than the overall market, even into close today. So I'm still looking at this, get even in here and lower time frame. Very much is just kind of a bear flag-ish look, if you will. So a bear flag is the opposite of a bull flag, right? You just kind of have this low volume pump on price. Let me get rid of that bull flag so you can see it a little bit better. So you have this kind of low volume pump. This is a much more impulsive, high volume move to the downside. Then you typically float back up. These will usually retrace somewhere in kind of that 382 to 0.5 category. So that's where it is. You can see it literally kicked off the 0.5 today, came back up and retested it. A lot can happen between now and then, but right now in after hours, you're down almost another couple of points or so. So I'm looking for this bear flag to play out. Couple different ways that you can measure it. You can either start from your last swing high to here. That would take you down to about 336 or so. And then the 618 is at 343. I also like to do it when I'm looking in shorter time frames. I like to do it kind of from the start of that impulsive move. So from the start of this morning's candle down here, back up, that one extension takes you to 341. So that's where I think we are probably headed overall. Certainly could make an argument for a bounce if this does break down tomorrow, like if the markets are weak. Certainly can make a case for a bounce right here, right around that 345. Maybe even a little bit lower. So as I'm kind of, it's this gap up right here that would have occurred on Thursday of last week. That will probably act as some form of support. But the reality is that gap fill right down here at 336. I think there's a very good chance Tesla has a ugly day. This was a very kind of micro UTAD, which stands for up thrust after distribution. This looks like a very distributive move here to me. So honestly, even if Tesla kind of came back up here towards that 360 and rejected one more time, I still think the most likely move is down rather than up from here. Like I said, could catch a short burst back up towards that 360, but if it rejects that again, and I mean, this might even take a little bit of time to play out. Like it could kind of form an overall much bigger sort of head and shoulder look right in here if the markets are real choppy, kind of like they have been. So always stay on your toes. Full disclosure, I am in some puts right now that I got once we came back up here and retested right around that 355 today. I think the risk to reward is more downside. If we start breaking above that 360, then I think that's when you can honestly look at much more bullish territory at that point in time. But this overall move from here to, if we go from our lows back up to here, that's 618, which is where most moves retrace to, is right at 340. Again, so there's a ton of confluence right down here at this gap fill. And if this is approaching, so don't just blindly buy calls at 340. If this is approaching this like a runaway freight train and the market is really weak, then I think that's when we're probably going to make some new lows around that 320, maybe even 310 potentially. Before then, we really start to curl up and out of here. It really just depends on the overall market. Also, highly recommend keeping your eyes on the flow. So in my Discord, we have unusual whales flow that's going to be keeping track of how much the whether or not the premiums on the calls or puts are rising. Tesla, if it starts getting 100 million in either direction, that's when you typically can see those really big moves. But this definitely looks like short-term distribution to me, which I said would roll over, and then we could potentially start a new move up. Now here's the other one, if this is an overall new impulsive move and Tesla does start to create a new uptrend, which just means we've been in a constant state of lower highs followed by lower lows, right? So what we're looking for is a change and break of structure, which means we put in a new high, which you can see we did that. Now we would want to get some type of higher low to then put in a higher high, to then put in a higher low, so on and so forth. That's how you always know what is the overall trend doing. The reality is ever since Tesla's all-time highs all together, that's what we've overall been in a case in, putting in those macro lower highs and lower lows. So now what we want to see to really feel like the bottom is in is Tesla would need to come down here. Maybe let's see, 330, 340, somewhere in that ballpark, really put in a significant volume push that then would take us up. I would want to see a minimum of a 1 extension, if not a 1.618. So it would take us up to 376 or even all the way up into the 400s again. And then to really feel good about an overall bottom being in on this. And typically you'll see this forming out is either like slanted inverse head and shoulders is a very common way of seeing it. Like honestly, let me jump over to NVIDIA because it's got one that I'm kind of watching for right here on NVIDIA is into earnings. So this is going to be your left shoulder, then your head, maybe form a right shoulder off that 200-day again if like the market is really weak, and then into earnings, something along those lines. I'd be careful about playing NVIDIA right now just because of earnings. That's always going to be a wild card, but that's something that you want to look for overall. So with Tesla, whoops, can't have a video without a big mistake like that. So with Tesla overall, that's what I'm going to be looking for. It's just one of those discount zone retraces. Discount zone just essentially means where the big boys are willing to buy. Big boys don't chase moves. Big boys, they buy on the retracements. So once we get underneath 345, anywhere between 345 all the way down to a double bottom is what's called the discount zone, where you would potentially like to see a bounce. If we do make new lows, what we're going to want to see, which I've covered this in other Tesla videos, is we want some type of bullish divergence going on the RSI, which it really just depends if it's kind of a slow walk down process over the next couple of weeks, and this just kind of slowly fades down here, and then you kind of start to see it do this, and you get a nice bullish divergence even if the price makes a lower low, then I really think Tesla's going to have probably its low for the year end at that point in time. So Yeah. Let me make sure I kind of covered all my bases. Yeah, I think that's the most likely. You definitely have a lot of support right here in this kind of 348 to 345. You start getting underneath that 345, I think you'll see a pretty quick slicing move. And honestly, that's what you want. Like you want in those deep retracements on those impulsive two moves backwards, you want that shakeout feeling. Like I want all of Twitter to be like, oh, here comes the new lows or whatever. You know, get back down here into the 330s to 340s. You want it to happen fast. You want it to be a complete shakeout move where anybody who bought this dip really starts panicking at that point in time. The pain trade is new lows. Like I said, the pain trade for sure is this before we get one of these going on. And I wish I felt a little bit better about the overall market, to be honest with you, as far as where I think this is going to go. So I highly recommend just watch your fibs, watch your levels, and like I said, every second the market is open, you're getting new information. But this was a clear impulsive sell-off move right here. Let's see here, even from this low. So I mean, you almost got to 618. So yeah, I don't know. Anything under 360 is just not good. I'll just leave it as simple as that. Anything under 360 on Tesla is not bullish. We are 100% in bearish territory. Bears have the opportunity to shove this thing down. And if we get below today's low, so that is 348. If we, for some reason, we gap below that into tomorrow morning, yeah, I think at a minimum you're definitely looking at 340, if not 333 to 332, for sure. So I definitely, as of right now, I like more downside than upside. Let's, as always, just kind of check our risk to reward. So assuming you were short or inputs right here, however you want to look at it, 332. And I would say if you start to get above, these previous tops, maybe like a point or two, let's just call it 360. So 360, that's a 3.87 to 1 risk to reward ratio. I like that. And then let's even see if we go to 340, how's our risk to reward? So 340, we're at 2.71. So I always like to be at a minimum of 2, but I really like 3 or more. So yeah, I still like it. So it's a great risk to reward setup here. All right, what else did I say I was going to talk about? Let's go Palantir. So when moves like this happen, you're always going to get those snapback kind of moves. Once again, let me use NVIDIA here as an example. This is pretty much what I think is going to happen with Palantir. So that initial ugliness happened, then you got the snapback move, then you got the rollover. What'd you get on the rollover? That's right. You got that bullish divergence that you want to see when you make new lows to feel bullish on. And then, of course, once it hit that low, then you went from 112 to 142, essentially. So on Palantir, if we break it down, if we get in here on the hourly basis, so the exact opposite was happening. As price was constantly pushing up towards higher highs, you're constantly making lower highs on your RSI. It was in a rising wedge, just things that make you go, But it's not one that has been conducive to shorting, right? Because pretty much any time it looks like a decent short setup, it's always been recovering. However, you had this move, so you had this low volume, right? As you're making new all-time highs, your volume is just getting less and less and less and less. Then you had a decent day, like essentially broke through all resistance, and your volume propped up a little bit. That's your up thrust move. Then you get the high sell, basically do a daily double top essentially. So lower time frame, you can see here your double top, and then you start to spill out also too. This is what you want to see. Your head and shoulders move right here. Highest volume here, lower volume on the head, lowest volume on the right shoulder, then the spillover. Just textbook, perfect, what you want to see. Now, we're going to get that snapback move. That snapback move can easily still push up from here. What you can see is your higher time frame EMAs start to catch up. Like these are your hourly 921 EMAs right here. As they start to catch up, you typically see this lower time frame. Yeah, that's pretty bearish in my opinion. So it may even roll over right here. But just kind of like I was saying on Tesla, these impulsive moves, it wants you to feel good again, right? So I could easily see this thing snapping back towards 114 to 118 before then getting a continuation rollover. And just always keep an eye on your volume. So obviously high volume today because it was such a dramatic move. And I told the team, like this post-earnings gap right here, this is gap up post-earnings right here, it's going to get defended. And if you take your fib from the move, look, you came right back into that discount zone. You got right into the gap of where it was post-earnings, and then you got sucked up. This is a guarantee where your average retail novice trader starts doing things like, oh, there's nothing but air right below here. And as soon as it started to lose these lows, as soon as it started to lose 100, right? The average retail trader, let's just go 15-minute time frame. Oh, yeah. Look at that. So the average retail trader just starts piling into puts right here when they see, oh, the earnings gap, that level broke. They start piling into puts. And then it puts in a 15-minute tweezer candle, and it's just up the rest of the day. So anybody who piled into puts today just absolutely got obliterated. That's what market makers do. Always remember, what is the move that is always going to screw over the most people? The most famous example of stuff like this, once again, going back to NVIDIA, was back over here. When it had this macro head and shoulders, look over here, and they swept out all the lows of the head and shoulders, even going down to the lower time frames. This might be too hard. My bad, guys. No. Where are we at? Yeah, this is it. So watch. Just get rid of the RSI. This is that opening morning candle. Slices right through. Takes out any and all stops that would have been in this range. Like these were your previous lows right here at 40. And this was NVIDIA pre-split. This is when it started slicing through 400 into 300. So you get, oh, the start of the head and shoulders, gap down, it's running, the start of the head and shoulders. 15-minute tweezer, literally never sees another low after that. So anybody who piled into puts because of the super macro head and shoulder look absolutely got obliterated. So anyway, people start going, oh, there's nothing but air below here. It's going to snap back. It's going to really put any pain on anybody who already sold out. So you already wiped out all of these people. Then you're going to move back up here. Probably get a large majority of those to buy right back in. Maybe you fill the gap. I kind of think I'd be surprised if you fill the gap. So I'm starting to kind of like right around 109 to 110. If you see some weakness there, then you create what we call an H, which is basically just a lowercase h. Usually this will wind up looking, something like a like a rising wedge or a bear flag, something along those lines. And then you're going to find new lows at that point in time. If you're super bullish on Palantir, what you'd want to look for at that point in time is, do you start picking up, let's just say you almost get the gap close. Let's say like right around 109 to 110. Yeah, then I would expect overall it come down somewhere between 84 to 71. And the reality is like, look, guys, like at the end of the day, that would pretty much just be retesting where it was at the end of January. That's really not the end of the world. So, like, stocks don't just go up for forever. Even this move right here, where it blasted through, before it made that move, you had a 40% pullback right to the 382, which probably means that probably was about a 0.618 extension. What you want to bet? No, got through a little bit, almost to the 1 extension. Yeah, now you got a new impulsive move. Plus you've got, yeah, I like that coming back to like 109 to 110. That's kind of what I'm thinking now. It certainly can come. I mean, the reality is as long as you don't make a new high right here, you're going to make a new low. I betcha. Yeah, just kind of watch that trend. I said we'll see what price action does tomorrow, but I can almost guarantee you we're going to come back and this is going to look kind of like a little lowercase h like that. And you'll know that next move is coming when that volume really starts picking up. But until they get news that offering, whatever CARP is doing, is over, yeah, there's a lot of confluence right around that 108 to 110. That's kind of what I'm thinking. And then, I said, let's go back here. A little bit more daily look. So this final move here, yeah, I mean, I personally wouldn't start adding positions if it were me. There's no way I would add positions at anything until it's underneath the 0.5 at a minimum. Where are you at on the 50-day? Oh, so look at that, right? That 50-day depends on how fast the move happens. If you kind of do, that's not what I wanted. But if you kind of do that sort of choppy little float up before it rolls over again. So it kind of the pain trade on this is a bunch of days of just float up crappy chop before you get the next impulsive move. I'd like to see a pretty strong move to like that 108 to 109 and then a super strong move down. That's what I would feel best about. And you'll probably find some support. So there's a lot of confluence that just coming back here to like 80s is going to be where you find support. And then let it come down, let it build out a base, and then potentially kind of start its next new J hook. Like I said, I ain't hating on it. I wrote it from about 16 to 100. I sold at 100 and have zero problem with that. But yeah. Okay, let's jump over here to GME. So, once it came up here, I posted on Twitter this Thursday that I thought it would come up here to around 28, 29, drop all the way back down. Then I think it's going to come back up here towards the pain trade here, which if there's one thing we do on meme stocks, it's pain trade them, right? The pain trade here is to start breaking through and everybody going, we reclaim the 50-day and we're getting up here, we're getting close to 30, maybe even creep into 30 a little bit before then coming down here. And then I really would like to see this low completely taken out one more time. So that would be around 26 or so. Then come down here and remember this 200-day moving average is just going to kind of keep creeping along like this. Then you come down here, make a base off the 200-day moving average, and then come up. And then you would probably make some new highs, pushing up towards like 36, 37. Well, let's just kind of look over here. Yep, probably around like 37 to 38. Then you'd like to see a retest back down here, and then potentially continue to curl up and out from there. So that's what I think we're going to see, something on GME. Obviously, there's always random catalysts that can come out when it comes to meme stock type material, kitty tweets, anything like that. But I'd like a complete sweep of all these highs, then a sweep of kind of this left shoulder here again, and then a push up, start taking out some of these highs, push down, stuff like that. So it's kind of this overall sort of inverse head and shoulder move. I've kind of highlighted it a couple times where this down here, yes, that left shoulder's lower, but remember that's kind of the carry trade. So under normal market conditions, it would have opened up around here, and then look, here you came down. This would have been your breakout, your retest. So arguably, could this just be an inverse head and shoulder breakout, retest, and it just go from here? Yes, that is definitely within the realm of possibilities, but I don't think that's the most likely thing. And the reason I don't think that's the most likely thing is for what I just talked about. It's the pain trade. And that's what happens when going around in meme stocks. So if you're a holder and a believer in this company, start getting back up in here. And really, so this daily fair value gap right here, yeah, so just barely over 30. So I think you come up here, you regain the 50, you regain bullish momentum, you get everybody pumped up and excited. You get up here, you take out that consequent encroachment of the daily fair value gap. Then that's probably when it rejects, roll over here, come down. Maybe. I'd love to see, once again, what's the pain trade? The pain trade's what happened just with Unity. Which, by the way, this thing looks fantastic. Been in since 18 to 20, and it's been a pain trade. Like it really has. So it made this bull flag. Remember I talked about this is what you always want to see anytime you lose this 200-day right here. So this was your shakeout. This was your NVIDIA break-in, the rejection of the 200-day, right? You pushed up, you rejected off the 200-day. Then you basically set up a morning star. So after anybody that was like, oh, dude, we're rejecting the 200-day, we gapped down below it, we pushed up or rejected, like I'm out. Tired. I'm not gonna watch this thing go all the way back to like $12 or whatever. And then just immediate V-shaped recovery. Just gone. Like, wait. Like before your account is even settled, it's already well back above where you just closed out at. And now, what happens? Now you're just left chasing. This is one of those things that I truly believe, but just between the books that I read and why I teach, like I really believe one of the things I do better than most people is understanding the market psychology and why and when shakeouts are going to happen. Now, obviously, I'm still wrong and I still have losing trades, but this is that, like I've showed you with NVIDIA, this is exactly the type of stuff that you would want to see. So that's the pain trade on GME. Get everybody excited. We regain the 50. Get retail piling into calls. We're over 30. And then the pain trade is then coming down and completely losing the 200-day. But if that happens, what you would want to see is you want to see that V-shaped recovery. You want to see, let's see, where was you? An aggressive V-shaped recovery. Doesn't have to be just, the world's most insane volume, but look at this candle. Other than today, which was just insane volume, right? So as soon as you gapped down and lost it, you had volume come in, right? You had a little bit of volume come in that day, but then the next day, no continuation. No buyers stepping in. You had that morning star look, because the very next day, you gapped above it, you came back and you retested, and you got bought up. And this was the most volume that you saw, minus, of course, the God candle today that was put in. And now You've got your highest daily close. Holy cow. Since March of 2024 in a year. And if you look at Unity on a weekly basis, there's always going to be red days along the way, but this is just a stock. Well, I'll tell you what it reminds me of. There's another one that I've done a video on. GRR, Gorilla Tech. Did I throw enough R's in there that time? I never throw enough R's in there. I always just say GRR. But this weekly downtrend right here, once you broke out and retested, that move from the retest to where we are right now is a 623% move. Let's go back to Unity. Look at that. The breakout came back, retested that breakout last week, and so far, from the retest, we are at a 47% move. What did I just say it was? 600 something? Once again, I'm not just suggesting Unity's flying right to this. But an apples to apples style move is Unity up towards 150, 160. If this was a intraday, let me clean it up here a little bit. So just as you're sitting at home, if this was an intraday 15-minute chart and you saw all this volume coming in here at the lows, then you saw a high volume breakout, a low volume retest, followed by, with good earnings, a quadruple beat, another super high volume move, what would you think? Me personally, I would say, well, at a minimum, I would expect this to come up and test somewhere between the 618 to the 786 of this move. Minimum, the 50% retrace of 54. Or coming up here to 74 to 81. Now, like I said, this is a weekly chart. It's going to take time. I'm just in shares. I have no plans of selling. There's obviously going to be some stickiness right here at this 382. Like, look at all this weekly support resistance flip. Yeah, 45. Yeah, I mean, so it's not just going to slice right through. But, well, I'll tell you, we use these comparisons a lot in the Discord because it's how these markets move. Let me jump over here to coin is a good one on a weekly basis, right? So look, it's kind of weekly falling wedge look. Once it broke out, so it's going to take Unity some time, not acting like it's not, but you got a 480% move. Let's just say we get half that, right? What's 200%? Look at that. 200% basically takes us to the 0.5. I said Unity, I think it's a $30, $40 stock at a minimum all day long. But this is no doubt in my mind. It went through its accumulation process. This was its spring down in here. Now that volume is coming in. It's going to work its way up. It'll probably, and I say quickly, probably by the end of this year, probably work its way up here somewhere. It's probably going to move by like mid-year. It might move up to the 80s, and then it's probably going to build out some type of sign of strength range up in here. Maybe it's a little bit lower. Let me delete that. So maybe, yeah, we come up here and it's kind of builds out like this before potentially moving on up. The company stays solid. But I mean, this next 2 years, 2 to 3 years, could be fantastic on Unity. I love it. I love my position. And I mean, even if it, I don't think it's going to, but if it does decide to dip down, so obviously I'm talking super macro here, but even just short term, from this nice move to here, back to here, Yeah, 30 to 43 all day long. It's at 28 already. So I think the 30s is coming pretty quickly, and it's probably going to a lot more than that. I really like it. Let's see what this overall retracement was. Yeah, so once this stopped, look at that. Came right back down into the weekly discount zone and took out all your weekly lows. Boop. Broke below all those weekly lows and then just full send. That's how the market gets you. Get your buy orders in where most people put their stops. Let's see here. On Gorilla Tech, I still think it looks good. Just basing above its previous highs. Market picks up at all. Yeah, I mean, 50 to 75 is still what I'm looking for this year. Yeah, I mean, it's just putting pressure on this previous resistance right here. Yeah, like I said, it's going to. I really believe it's going to look like all these same charts of Hood. Right. Like, look at this. Let's go to the weekly on Hood. You just can't tell me that, for instance, like a Unity's chart doesn't look like it's just now starting to, catch some of these breakouts. And there's going to be big pullbacks along the way. That's just part of it. That's why a little bit more speculative names, I only play them with shares. Like this pullback right here. Blink, right to the 618. Perfect. Before full send. So you're going to get whipsaw moves and pullbacks and everything like that. But as long as your chart stays intact, you just roll with it, man. Okay. I think that was really kind of all I wanted to cover. I've already gone way longer than what I anticipated. Hope this video was helpful to you. Please don't ever hesitate to go back and rewatch it. A lot of the stocks, I'm always trying to give you like the if this then that type of mentality. It's never just I can't stand it when people are like, oh great, so we can go up or down a time wave. And I'm like, well, yeah, that literally can always happen. So you always have to have this is what I think is my most likely. However, if this level is invalidated, I have to go with this. This is where I know. And you have to have those times and positions where you go, this is where I know my trade is invalid. This is where I know that my trade is good. Here are my price targets. Like you have to have a plan of attack. You have to be prepared. So, please like and subscribe, all that good stuff. Much love. I will see you guys later. Have a good one, my friends.